Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome to this week's episode of the Fiscal Physical Podcast. My name is Aaron Hoisington, and you can find this podcast on all the different platforms, Apple Podcasts, Spotify, anywhere you might get your podcast, you're going to be able to find the Fiscal Physical, and this podcast wouldn't be what it was without the founder of Alchemy Wealth Management joining me, Ryan Nelson. How are you today, my friend?
I'm doing well. How are you doing today?
I am doing fabulous, and I want to give a shout out here that this is our 25th episode that we are recording here.
That's awesome. Half a year, really.
Yeah, it really is. Time flies when you're having fun as well, too. And I hope everybody who's listened from episode 1, or if you just picked this up last week, are able to go back and check out those other episodes to hopefully get yourself a little bit more fiscally fit. And we're going to dive in today to a topic that's qualified charitable distributions. A little bit of a mouthful there as well. But if you listen to our previous episodes, we talked about RMDs in the past ones, which are correct. What are those again?
Required minimum distributions.
Cool. I think I messed that up the last time we did this. So required minimum distributions. Now we're going to talk about qualified charitable distributions. So I'm going to go ahead and shut up for a minute and let Ryan educate y'all.
Perfect. Yeah. So qualified charitable distributions, like you said, it is a bit of a mouthful. So most people will just refer to these as QCDs. And so I'll probably just refer to it as a QCD for the rest of our chat as well. So QCDs, they are actually relatively straightforward and simple. I see some confusion around these things, typically around confusing them with something else. But really, qualified charitable distributions, or QCDs themselves, are pretty straightforward and simple. I just grabbed an IRS definition right off the IRS's website. So the Internal Revenue Service, this is a notice they posted, and so it basically says it's reminding individual retirement arrangements. So remember, that's an IRA. So they're oftentimes referred to as individual retirement accounts. They're actually individual retirement arrangements. So individual retirement arrangement owners age 70 and a half or over can transfer up to $105,000 per person to charity tax-free each year. So that's sort of the IRS, what they have stated on their website. So if we think about that, so typically if we had an IRA and we take money out of our IRA, we pay taxes on the money we take out. So if I took $100,000 out of my IRA, I would have to pay income tax on that $100,000. Right. Depending on where I'm at tax-wise, that might be $20,000 going to the IRS. I'd only be left with $80,000 to spend, right? What they're basically saying is if you want to take advantage of this QCD, I could just send that $100,000 directly to a charity and it would be tax-free. So instead of me, say, taking out $100,000 out of my account, paying the IRA, paying income tax on it, being left with $80,000 that I could actually spend, and then maybe going and doing charitable events and giving $80,000 total to these charities over the year. Instead, if I wanted to give, I could have just given directly out of the account and actually given $100,000 to the charities as opposed to just the $80,000 to the charities. So it's just a little carve out that the IRS created that makes it a little bit more efficient and basically a way to avoid taxes from your IRA if you're charitably inclined and want to give to that charity.
That's a really interesting piece of it, because some of the things that we talk about here, I'm 33 years old at the recording of this podcast, and so I look at the number of 70 and a half or over, and I'm like, wow, that's kind of limits the people who can take advantage of this specifically. But at the same time, like, I'm almost halfway there. Like, you put it in perspective, and you're like, oh, okay, cool. And I look at this, and I almost see that it's a great quote unquote problem to have. If I have the money, if I have the ability to contribute $105,000 to a charitable organization at age 70, it can also count, give me benefits at the same time. Like, awesome.
Yeah. Oh, it's phenomenal. And one of the main benefits where I see this actually like used quite often is so we talked on a previous episode about required minimum distributions, right? RMDs. And so that same sort of demographic of people that are required to take these minimum distributions. So let's say a 75-year-old, they would have RMDs, required minimum distributions. So if they had accumulated, $1 million in their IRA over their lifetime, now at age 75, they'd be required to start taking money out. Well, sometimes you'll chat with these people and they're like, yeah, I don't need to take any money out of I'm fine living on my pension, my other accounts. I don't need any of this money out of my IRA, but the government's forcing me to take it out. So I'm taking it out, I'm paying taxes on it, and then it just sits in an account. Maybe I reinvest it, I do something. And so oftentimes what you'll see is that 75-year-old, well, guess what? They qualified. They're over 70 and a half years old. So they can say, well, if the IRS is going to make me take out whatever, $50,000, I'll just go ahead and give it to a charity. It's not going to affect my taxes at all then whatsoever, so I don't have to worry about paying taxes on it or doing anything. I'll just go ahead and give that all to a charity, and then the charity can get all $50,000. So you see it a lot. So to your point, you have to be 70 and a half to take advantage of it. A lot of the people using these are ones who have to take RMDs who are that same sort of demographic anyhow. So
yeah, no, that's great. And with everything, obviously you just can't, give it to a quote unquote charity that's not registered, I would assume. Like it has to be an officially registered charity and has to be there's a little bit of stipulation there that you have to follow, I would assume.
Yeah, definitely. So the charity has to be a legit 501c3 organization. But even on top of that, not all 501c3s qualify. So it has to be a 501c3 that's eligible to receive tax-deductible contributions. So not all 501c3s are eligible to receive tax-deductible contributions. So you definitely want to work with your CPA here, especially if you're pulling out something like $100,000.
Sure.
You'd want to make sure you're giving that to the proper 501c3 who's eligible to receive those tax-deductible donations, so you can make sure you take advantage of it. The other thing I'd say, the other pitfall that I see people fall into is this has to go directly. This basically bypasses you. You could think of it as going directly from the financial account to the charity, to the charitable organization. So you can't just go take like $100,000 out of your IRA, go write a $100,000 check to the charity and say, cool, that was my QCD, that was my charitable donation. That's not how this works. That's going to count as a withdrawal from your IRA, and then an independent donation to the charity, right? So you want to make sure you go through the proper depending on where your account's held, you want to go through the proper basically process or paperwork with the custodian or whoever's holding your money to make sure you do the QCD properly so you can actually get that tax benefit.
That's awesome. Yeah, and that's a huge piece of it as well too, because you think about like, oh, cool, you pretty much it funnels it so you're not able to do anything with it specifically. Yep. It's like, hey, it's going right to this charity, only to this charity.
Yep.
That's the way that it's set up to be done, and that's the way to take advantage of that.
Yep, exactly. And so what I find is it's a super cool tool for those who are charitably inclined. What I will I'll be straightforward. It's not really a tax savings tool. Like even if your tax rate was like an absurd 99%, which doesn't even exist, right? Even in that case, for every $100 you take out of your IRA, $99 would go to the IRS. You'd still be left with a dollar.
Sure.
So like even in the most absurd, unrealistic tax situations you can imagine, you still make more money by not giving to the charity, right? So these tools are really for those who are charitably inclined. Mm-hmm. If you are going to give to a charity, this is a way where for the same basically effect to you, you can give more to the charity, right? So it's a fantastic tool for those who are charitably inclined already. And it can, the charities obviously love it because instead of getting an $80,000 donation, they're getting a $100,000 donation, and it's costing you the same amount. Mm-hmm. So it's a great tool to take advantage of if you're charitably inclined.
Absolutely, and that's a great piece because I was going to ask, like, who would normally do this? And people who are charitably inclined who have already been giving are in a good financial spot to be able to do that, and hopefully with proper planning, you'll be able to get there. And I mean, I'd love to be able to every year be like, absolutely, I'd give $105,000 to a charity. Like if I get to that point in my life, I think I've done a few things right. So,
absolutely,
that would be the goal, if you will, specifically.
You must have hired Alchemy Wealth Management.
Exactly,
No,
or the charity is the Aaron Hoisington Foundation, one of those two. So. proper 401c, 501c or whatever it is. But awesome. Well, thanks, Ryan, for breaking that down for us here. Hopefully that gives the listeners a little food for thought here, because that time really gets away from you, to say the least. And
Absolutely.
Before we're going to blink, we're going to be 70 ourselves. So awesome. Well, we'll go ahead and pause here, come back with a personal question. Hang tight.
And now, to put the personal in personal finance.
Welcome back to this side of the Fiscal Physical podcast. I am still here with Ryan, and I've got a personal question here for you, Ryan, which is one that's kind of near and dear to my heart. So I'll go ahead and pose it to you. If you could instantly master any language or languages, what would they be? You can share one or two.
Sure.
Obviously, 'cause it's hard to break down just for one. But what would
I should
be?
probably start with English, to be honest. But assuming I'm gonna say that I've kind of at least got to some level of mastery.
Sure.
But yeah, also outside of English, just I think based on proximity, I would prefer Spanish. My number one language would be Spanish, just based on proximity and like the countries I'm most interested in visiting and stuff, and the people I already know, the languages they know and stuff. So I'd probably say Spanish. My number two would be Mandarin, and I think Mandarin has the most. I think English is the most common language in the world, if I'm not mistaken. But I think Mandarin is the most. How would you word that? The most native speakers. So like English is a lot of people's second language.
Sure.
So I think more people speak English than any other single language, but I think Mandarin is most people's, more than any other language's first language.
Right. Yeah. Their native language.
Yeah.
Specifically.
So I think that would be also be a cool one. So if you could, if I could master first English, that'd be awesome. And then my second one would probably be Spanish, just based on my kind of our geography here and stuff. And then if I could loop in a third one and get Mandarin there, God, you could probably conquer you could travel so many places, meet so many people, communicate with so many people if you knew Spanish, Mandarin, and English.
Absolutely.
So
what it would unlock is just be phenomenal, just in general too.
What about yourself?
Well, definitely. I mean, I didn't even think about the English piece because, I find myself writing or speaking, and I'm like, well, I don't know the word for that.
I'm imagining our podcast listeners would just love if we could master the English language.
Maybe do some English classes there first. But definitely, I mean, I studied myself in Costa Rica, so I have a functional use of the Spanish language right now, and it's coming very handy throughout my life. Currently, I'm trying to learn Portuguese right now because my wife's from Brazil, and so I've kind of just been putting it off because it's like frustratingly similar, but so different at the same time. So I'm currently trying to learn that, but absolutely I would love to learn an Asian language, whether it be Mandarin. I'd love to learn Japanese. I have a friend who I went to high school with who studied in Japan, and he's fluent now, and it's just a really interesting language, the characters that go through it, and how you read and write it. And I just think that it would be just such a beneficial, thing to learn. Even in like the United States, like you go up to, or in different cities on the coast, like the West Coast, you have people who are, you go to a Chinatown in a lot of places, and there's always the ability to use those Asian language, and I think Korean is really cool too. Like to hear them, and forgive my ignorance, sometimes they sound similar to in my brain, but they're so different itself too. So I think languages just in general and communicating is such a wild area, and so I definitely, if I could probably just choose one. I'd want to be able to do the Portuguese first, just for my wife and her family, so I can communicate a little bit better. And then I'd probably do Japanese. I think would be the one, because I've had people who've had friends who visited Japan. They said they loved it as well too, and I think that it'd be kind of fun.
Yeah, absolutely. You know my Portuguese story, right?
No,
you don't.
I don't think so.
No.
Maybe.
So we went down to Brazil, and so me and a few buddies. I'm sure you've heard this, but so I started on Duolingo, which is just a language learning app. So I started on Duolingo. So I was like, it would be cool, at least have, like you were saying, sort of a functional use of the language, and you're not going to get that, I had started like a few months before the trip, but just trying to get like at least greetings and stuff like that down. And so then we're like getting ready for the trip. And so, I had put in a few months of like training and stuff. And so we're getting ready for the trip. And, I'm talking to my buddies and they're talking about how they've been kind of doing the same thing on Duolingo. And I'm like, well, you guys will be good because they both speak Spanish. And I'm like, you guys are going to be good. And, they're like, no, it's quite a bit different. Like there's a lot of similarities, but there are differences. And I'm like, what do you mean? I'm like, and I'd been studying Spanish. Just my ignorance, I didn't realize they spoke Portuguese. And so just my ignorance, I didn't, I'd been studying Spanish for 2 months, going to a country that speaks Portuguese, thinking that's going to help me out. So, just goes to show you we're all ignorant, right? I might be good at financial advice, but we all have our areas of ignorance, and just one of those things
that is so fun. I don't know as though I've heard. I didn't know that, to be honest. That's so funny.
Yeah,
but hey, you win some, you lose some, and I'm sure it was still a great trip.
Yeah. Oh yeah, absolutely. They knew enough to get me by.
Absolutely. Yes, I love it, man. Well, appreciate you sharing, Ryan. Appreciate all the listeners who are tuning in here. Definitely want to call it out again. 25 episodes down here, so a quarter of a way to 100, and hopefully everybody's going to continue to join us along this journey and hopefully gain more followers. Please check us out on all the different podcast platforms and rate, subscribe, like, send us your feedback, and I'll turn it over to you, Ryan, to play us out here.
Thanks, Aaron. As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.